Right now in the United States, there are actually more households with a pet than there are households with a child.
Which is just a staggering statistic when you really think about it.
It really is. I mean,
Mm.
we've officially crossed this cultural threshold where, spending $150 on a dog's weekend spa treatment isn't really considered this extravagant luxury anymore.
No, not at all. For so many people, it's just standard care.
Right. For millions of these busy dual-income families, that kind of premium care is, well, it's become a non-negotiable utility. But here's the catch. The exact same professionals who want to give their pets this royal treatment are completely tapped out on time.
Yeah, and that means the old traditional model of pet care is just fracturing under the pressure. I mean, the modern consumer doesn't want to spend their Saturday morning, dragging a nervous animal across town.
Oh, definitely not.
Right, just to sit in a noisy, crowded kennel for 4 hours just to get a haircut. They are actively seeking these premium, ultra-convenient, at-home solutions.
And that massive gap in the market is exactly what we are focusing on today. So, looking through the materials you shared with us, our mission for this deep dive is to unpack a very specific business model capitalizing on this boom.
Yes, and it's a fascinating one.
It really is. It's a franchise called Woofie's. And for you listening, whether you are a corporate professional trying to figure out like an exit strategy from your 9 to 5, or maybe you're an existing franchise owner looking to expand your portfolio, we're going to break down how this model actually works.
We really need to look under the hood on this one.
Exactly. We're going to examine their unit economics, a really unique multi-tiered revenue strategy, and the operational support systems that make this so attractive to investors.
Yeah, and taking a step back here, evaluating a franchise in this space requires setting aside the emotional aspect of, simply liking dogs.
Right? It's not just a hobby.
No, exactly. This is really an exercise in identifying what analysts call recession-resilient essential services. The data shows that in the pet sector, consumer spending remains remarkably stable during economic downturns.
Wow, really?
Yeah. People will, they'll cut their dining out budget, they will delay a vacation, but caring for their pet is viewed as a fixed family expense.
That makes total sense.
Yeah.
I want to dig right into how Woofie's is capturing that fixed expense because conventional cookie-cutter pet care just doesn't work for this demographic.
It really doesn't.
Like, if I have a senior bulldog, I don't want him thrown into a pack of 30 high-energy puppies at some day camp. I want someone who knows he just needs a slow 10-minute stroll to sniff the grass.
And that demand for hyper-personalization, that is really the foundation of their first major structural advantage. It's this recurring revenue ecosystem.
Okay, break that down for us.
So if you look at the broader industry, most pet businesses are entirely siloed. You might operate a grooming salon, or, well, you might run a dog walking route, or you offer vacation pet sitting.
Right, they're all separate things.
Exactly. But Woofie's takes a completely different structural approach by combining all three of those distinct services into one single franchise operation.
Oh, wow.
Yeah, so you have pet sitting, midday dog walking, and a fully equipped mobile pet spa that drives right up to the client's house.
Okay, so the Apple ecosystem analogy immediately comes to mind here. You buy the iPhone, then you need the AirPods, and eventually the brand is just seamlessly handling your entire digital life.
That's a really good way to look at it.
But I am going to push back on this a little bit because Apple is a trillion-dollar tech company. If I am looking at a local pet care franchise that claims to do walking, sitting, and mobile grooming, my first instinct is, well, jack of all trades, master of none.
Sure, I hear that a lot.
Like if a dog walker tells me they also run a mobile spa, why would I trust them to safely groom my highly anxious poodle? Doesn't stacking these services dilute the quality of care?
It's a very valid concern. It really is.
Okay.
But you have to look at the underlying mechanism of how these services are delivered, and that mechanism is built entirely on the currency of trust.
Trust. Okay, explain that.
Let's look at the customer acquisition journey. When a pet parent hires someone for an in-home service, like a midday walk, they are handing over the keys to their house, their alarm codes, and entrusting a stranger with a beloved family member.
Yeah, that is an enormous psychological hurdle.
It's arguably the highest hurdle in any service business. You are letting someone into your private sanctuary when you aren't even there.
Exactly.
Precisely. So, consider the friction involved in that process. A client spends weeks vetting a company, They finally grant that access. The local Woofie's team comes in. They learn the dog's specific quirks, their anxiety triggers, where the treats are kept.
Right, they build that relationship.
Exactly. The trust is established. Now, 6 months later, that same dog needs a groom. The owner is faced with a choice. Do they go out into the market, interview a brand new mobile grooming company, start the trust-building process from zero, and hand their house keys to yet another stranger?
No, they absolutely do not want to do that.
They don't. And that is exactly where the cross-selling mechanism engages. Because the franchise owner already captured that client through the dog walking service, transitioning them into the mobile spa service requires virtually zero additional marketing spend.
Wow, so the marketing cost just vanishes.
Exactly. The customer acquisition cost, or SLINKOW, is effectively eliminated for the second and third service lines. The consumer instinctively uses the team they already trust.
That is brilliant.
Yeah, so rather than diluting the business, this three-in-one model builds a fortress around the customer relationship. You stack multiple recurring revenue streams from a single initial acquisition.
That dramatically changes the math on lifetime customer value.
Yeah.
You aren't just hoping they call you once a year when they go to Hawaii. You are their weekly walker, their monthly groomer, and their annual sitter.
You're their everything for that pet.
But practically speaking, combining 3 separate business lines usually means leasing a massive commercial warehouse. I'm picturing like a multi-million-dollar nightmare of zoning permits for kennels, building out expensive drainage for washing stations, fighting with commercial landlords.
Absolutely. Which is exactly the financial trap that ensnares so many traditional brick-and-mortar pet franchises. But the model we are analyzing bypasses physical real estate entirely.
Wait, entirely?
Entirely. It is a fully mobile franchise system.
Yeah.
The services are delivered either in the client's home or in the mobile spa van parked right in their driveway.
Okay, let's get into the actual unit economics of that mobile advantage. Because if you are sitting in a corporate office right now, dreaming of building a scalable asset, the financial barrier to entry is always the first filter.
It has to be. So if we look at the franchise disclosure documents, the mobile nature of the business translates to a relatively accessible upfront investment.
What kind of numbers are we talking about?
The estimated initial investment ranges from roughly $160,000 up to about $274,000.
Okay, so a fairly wide range, but definitely sub 300,000.
Right. And to qualify financially, the franchisor requires a prospective owner to have a net worth of $350,000 and approximately $80,000 in liquid cash.
Let's pause on that liquid cash requirement for a second, just to be crystal clear for everyone listening. We aren't talking about home equity or 401k here, right?
Correct. Liquid cash means unencumbered funds sitting in a checking or savings account or, highly accessible index funds.
So money you can actually touch right now.
Exactly. Franchisors mandate this because it acts as your working capital runway. When you launch, you need those liquid funds to cover payroll, van insurance, and localized marketing blitzes before the business actually reaches its break-even point.
Okay, that makes perfect sense. You need gas in the tank to get the engine running. And what about the ongoing structure?
The ongoing royalties are 6.5% of gross sales, and that's paired with a 2% brand fund, or ad royalty, and it operates on a standard 10-year renewable franchise agreement.
I have to stop you there.
Yeah.
Because while a $160,000 to $274,000 investment is highly accessible compared to, say, a quick service restaurant where you need $1 million just to pour the concrete foundation.
Oh, for sure.
But a 10-year agreement is a decade of your life. It's a massive commitment. Why would a successful, high-earning corporate executive leave the safety of their salary to manage a fleet of dog washing vans?
Well, they do it because of the operational structure known as the semi-absentee model.
Okay, the semi-absentee model, walk us through that.
So the target demographic for this franchise isn't necessarily someone who wants to drive the van and wash the dogs themselves. A corporate professional evaluates this as an investment vehicle.
Right.
In a semi-absentee setup, the franchise owner hires a dedicated general manager, and that manager handles the daily dispatch, the employee scheduling, the fleet logistics, all of that.
So the owner's working on the business, not in the business.
Exactly. The owner's primary role becomes managing the P&L, analyzing the KPIs, and executing high-level local networking.
Like what kind of networking?
Building relationships with local veterinarians, luxury apartment concierges, high-end pet boutiques. They act as the CEO of their local market.
Ah, I see.
Furthermore, they are drawn to the speed to market. Without a protracted commercial real estate build-out, there are no construction delays or 6-month waits for municipal zoning permits.
Yeah, real estate could hold you up for a year easily.
Exactly. Here, you acquire the vans, complete the corporate training, hire your initial team, and launch.
The overhead dynamic has to be vastly different, too. I mean, managing a fleet of vehicles comes with its own very real realities. Gas prices fluctuate, tires wear out, vans need transmissions. But I imagine that stress is different from a retail lease.
It is entirely different. Vehicle maintenance is a variable cost that scales with your revenue.
Right, because if a van needs new tires, it means it's been driving.
Exactly. If a van is driving and using gas, it is generally generating income. Contrast that with a brick-and-mortar retail lease, where you are paying $15,000 a month in fixed rent, whether customers walk through your door or not.
That is a terrifying reality for a lot of business owners.
It really is. That lower fixed overhead allows for much faster scaling. And the franchisor actively recruits top-tier operators with significant incentives. For example, they offer a 30% VetFran discount on the initial franchise fee for veterans.
Oh, wow, 30% is substantial.
It is, and it's because they acknowledge that military veterans often excel at executing highly systematized logistical operations like fleet management.
That speed to market and the semi-absentee structure definitely explain the momentum we're seeing.
Mm-hmm.
The documents show 39 units open and 61 awarded by the end of 2023. There's aggressive growth.
Very aggressive, yes.
But we need to look at the reality of running this day-to-day.
But-
You mentioned the owner acts as the CEO, while a manager handles logistics. But coordinating daily schedules for dozens of walkers across a sprawling suburb, running highly targeted digital marketing campaigns, and hiring specialized staff. I mean, it sounds like an administrative bottleneck that could easily cap an owner's growth and lead straight to burnout.
Well, if a local owner tried to build all of those systems from scratch, it would absolutely lead to burnout. There's no question.
Right.
But this brings us to the operational infrastructure, which is really the core differentiator of this specific model. Woofie's operates under the umbrella of authority brands.
Authority brands. So they are backed by a massive enterprise-level parent company.
Yes. And that enterprise backing entirely rewrites the operational reality for the local franchisee. Let's break down the two largest bottlenecks in any service business, which are marketing and labor.
Okay, let's start with marketing.
If you are an independent pet groomer trying to master local SEO, navigate changing social media algorithms, and optimize digital ad spend, that is practically a second full-time job.
Oh, it really is. You are a pet expert, not a digital marketing agency. Most local business owners are just, throwing money at Facebook ads and hoping for the best.
Exactly. They're just guessing. But under this franchise model, Authority Brands utilizes a do-it-for-me marketing approach.
Do it for me. I like the sound of that.
Right. The corporate entity handles over 90% of the marketing execution for the franchisee. They leverage aggregated data across their entire network to know exactly which keywords convert, what the optimal cost per click should be, and how to structure the localized SEO.
That is massive. It's really like having a Formula One pit crew.
That's a perfect analogy.
Right. You, as the franchise owner, are the driver. Your job is to stay on the track, navigate your specific local market, and lead your team. But while you're driving, you have this elite corporate pit crew monitoring the telemetry.
Exactly.
They are analyzing the data, feeding you highly qualified marketing leads, and optimizing the engine. You don't have to pull over to try and figure out Google Analytics yourself.
And that analogy perfectly illustrates the administrative side as well. Consider the inefficiency of a local manager trying to handle an employee issue or a complex fleet routing problem, and then the phone rings with a customer wanting to book a dog walk.
Right, you're constantly pulled in different directions.
Exactly. And if you miss the call, you lose the revenue. But if you take the call, your operational flow is completely broken.
And hiring a full-time receptionist just to catch those calls eats directly into your profit margins, especially in year one.
Precisely. To solve this, the franchise utilizes a centralized corporate call center.
Oh, really?
Yeah. So when a local customer calls the franchisee's number, it routes to a highly trained team at corporate. They handle the inquiry, answer the questions, and utilize customized franchise management software to book the appointment directly into the local owner's schedule.
Wow, so it just appears on their calendar.
Exactly.
Yeah.
It drastically reduces local payroll costs and ensures zero missed leads.
Okay, the marketing and administrative support is extremely robust. But let's talk about the F1 pit crew when a tire completely blows out.
Let's do it.
Because in the pet care industry, the equivalent of a blown tire is losing a groomer. We looked at the industry research, and finding qualified pet groomers is notoriously difficult. It's not an entry-level gig.
It really isn't.
Yeah.
It is the single largest structural bottleneck in the pet spa industry.
Yeah.
Grooming is a highly specialized trade skill. You are dealing with live, unpredictable, sometimes anxious animals while wielding sharp instruments. You cannot simply place a help wanted ad, hire someone off the street, and hand them clippers.
Definitely not.
Ugh.
So if you are an investor looking to scale from, say, 2 vans to 10 vans, your growth is fundamentally capped by your ability to find these rare skilled tradespeople. How does this model bypass that labor shortage?
They bypassed it by building their own labor pipeline.
Building their own pipeline.
Yes. Woofie's developed the Woofie's Academy, which is an internal professional pet grooming school.
Oh, wow.
And this is not just a weekend training seminar. It is an established educational infrastructure. It takes an individual, perhaps someone who started as a dog bather or a walker within the local franchise, and puts them through rigorous, standardized training to become a fully certified groomer.
That is incredibly strategic. You aren't fighting your local competitors for the 5 certified groomers within a 50-mile radius.
Well,
You are manufacturing your own talent pool.
exactly. It completely changes the scalability of the asset. You pair that academy with the Authority Brand's talent team, who actively assists local owners with recruiting and onboarding all levels of employees, and you effectively remove the labor ceiling that traps so many independent operators.
Let's bring all of these threads together for the listener. We started by looking at a shifting cultural landscape where pet spending has evolved into a highly lucrative $100 billion+ market.
A massive market, yes.
Right. And we unpacked how a 3-in-1 mobile model layering, sitting, walking, and a mobile spa virtually eliminates secondary customer acquisition costs. It creates this deeply entrenched, recurring revenue fortress around the client.
We also examined the unit economics, noting that a fully mobile, semi-absentee model requires a lower upfront investment and much lower fixed overhead than traditional retail real estate, which allows corporate professionals to scale significantly faster.
And finally, we looked at how enterprise-level corporate support, that F1 pit crew we talked about, steps in to solve the brutal realities of local marketing, administrative bloat, and the highly specialized grooming labor shortage.
Which brings us to the ultimate takeaway for the listener today.
Yeah.
If you are a multi-unit investor seeking a recession-resilient asset or an executive planning your corporate exit, the criteria you are looking for are right here: high consumer demand, driven by emotional attachment, multiple stacked revenue streams, and a franchisor that absorbs the heavy operational lifting so you can focus purely on business growth.